Hey everyone, this is Heather, and this is going to be an introduction to technical analysis and technical indicators. And this is a part of our series on introduction to trading. So this is going to be a quick video where I'm trying to go over what technical analysis is and how people mostly use it for their own trading and some pros and cons of technical analysis. So what's technical analysis? So technical analysis and technical indicators are just signals that are derived from the price action. So whatever you see in this chart in front of you, these candles, technical indicators, technical analysis is again based on technical indicators. So technical indicators are just based on whatever you are seeing in this chart. So these green and red candlesticks, we have a video on what candlesticks are. These green and red candlesticks, these are what are used in the calculation of technical indicators. So technical indicators such as RSI and MACD, if you have heard about these names, there is no rocket science there. Everything that you see on the internet in terms of the technical indicators is just derived from the price. So for example, this RSI, it's this RSI value, relative strength indicator, which is the technical indicator, it's just derived from a formula that deals with the lows and highs and the red and the green candles and the volume, let's say. So it's just a formula that does some calculation on top of the price action and then shows you these lines and shows you these signals. So the reason we don't want to sometimes look at the price action and we want to use technical indicators is because it gives us simpler signals and it gives us more actionable signals in terms of what to do and when to do it. So for example, RSI, uh, relative strength indicator, yeah, it is a signal, is an indicator where if the price of RSI ever goes above 80, you say that this is now oversold and this is now overbought and you need to just sell it. And whenever the price goes below 20, you say that this is oversold and there is a buy point. So the technical indicators give you really good entry and exits and really good actionable items. So that's why most people use technical indicators and technical analysis, because it's just a bit easier to look at technical indicators than looking at price action. But please remember that everything is still derived from price action. So if you are an expert in looking at price action, just this chart and these candles and the volume, then maybe you don't need technical analysis and you're totally fine with just looking at the price action. But if you are new, then sometimes technical analysis helps as well. A quick point that I want to add here is that if you just focus on technical indicators and you want to find a holy grail where you can just follow one simple or complex technical indicator and you're going to get profitable, then please know that we at Tradetix have run millions of simulations based on all kinds of technical indicators, and there is no single combination that ever works the best in isolation. You always want to have some other confluence factors when you are doing technical analysis. So so just know that looking at technical indicators alone might not be enough. If you have, let's say, one technical indicator, and again we were talking about RSI, where we say if the value is above 80, you need to sell, and if the value is above 20, you need to buy. If you just follow this rule, then you might see that in long term, let's say 20-30 years, this might not be a very good signal in terms of profitability. But if you have this signal and you have a few other signals as well, we'll talk about a few, and let's say you have a confluence of 3 or 4 different signals and then a few other factors as well. The company is doing really good, earnings came out and they were really good, stuff like that. Then if the technical analysis is also supporting that, then it's a really good tool to use. So then you definitely can use technical analysis. But please know, I've spent about 3 to 4 months just looking at all kinds of technical indicators because I thought I am going to find a silver bullet and then I'm just going to use it and this is going to be so easy. But trading is not an easy thing, it's a slightly harder thing to do. So please know that there is no silver bullet out there. You always need to find confluence of multiple factors if you want to be a profitable trader. There is just not one single thing out there. So now that we have talked about some pros and cons of technical analysis, let's go over some technical indicators that are quite common and famous. So the first one is RSI. which is again which is called a relative strength indicator. And if you want to learn more about each of these technical indicators, then a really good resource is Investopedia. So if you go to Investopedia and you search for any of these technical indicators, oh sorry, I've been saying relative strength indicator, it's relative strength index, my bad. So if you go there and you click on these documents, then you'll see that there are really detailed documents on how these technical indicators are calculated, and what are some of the pros and cons of these technical indicators, how to best use them, what are some of the trading regimes where you should use them, whether we are trading in a consolidation, uptrend, downtrend, where to best use these types of indicators. So these are really comprehensive articles on each of these technical indicators, and if you go through these, you're going to become sort of an expert, or at least you'll know about that particular technical indicator really well. So again, we can see that it talks about divergences as well, and you can see that if you just click on this divergence, then you'll also know what divergences are. So just go to this website and explore it for a few days to learn about all the technical indicators that we are talking about here. Then we have the MACD, which is again just a combination of a few moving averages, where what you do is, so for RSI, again, what people usually do is if it goes above 80, you sell. If it goes below 20, you buy. And let's see if that ever works. So at this point in time, if you just hover over here, you are going to see that on the left, the RSI is 84.4. And we are now, let's say, overextended. So that means we are overbought here, so we need to sell. So if you were here and you saw that RSI was greater than 80, so you need to sell, and you just followed that signal, then we can see that at this point in time, if you sold, or if you shorted, or if you bought a put, then that was a really good signal, because the price actually went down the next 5 days, and it actually remained below this point for a very long period of time. So you can see that it's not all fluff. There is some value in using technical indicators. Just know that you need to combine some other things as well. So this was a really good one. Let's see if we can find something else. 39. Let us see. So there's 70. All right, I'm seeing 26. Let's see. Here 24. So again, we can see here as well that at this point in time, the RSI was 24, and if you had bought here, then you can see that we went up from this point. So again, from historical data, we have just seen two examples where RSI worked really well. Similarly, we have MACD, which is a combination of a few moving averages, and the theme here is the same. When the green line crosses above the red line, then that's a good buy point. Or when this purple line, sort of bar chart goes above 0, or goes above this horizontal line, then that's a good entry point. And when it goes below it, then that might be a good short position point, or that might be a good exit point. So let's see if we can find something. So you can see that at this point in time, at this point right here, we actually crossed the green line, crossed above the, let me zoom this out, the green line crossed above the red line. So at this point there was a buy signal, but as you can see, the price did not follow through, and it actually went down, but eventually it did go up. And at this point, now you can see right here, we had the signal again where the green went below the red, but then it went up again. So that was our buy signal, and then if we bought here, then the price actually went up. Now here you can see that at this point in time, the green line actually went below the red line, and since the green line is a shorter signal, it's following the price more closely. When it goes below this red line, then you need to sell. So if you had sold here, you can see that this was a good signal, where if you sold here, or if you shorted here, then you sort of caught this entire downtrend, which is again really good. So as you can see that sometimes these signals are panning out, sometimes they are not. So just keep that in mind. They are not always accurate, but they are really useful because they are condensing this entire price action and these all kinds of different candles into very simple lines for you. So now we have covered RSI and MACD. MACD stands for moving average convergence divergence. If you want to just sort of search for it, let's see. We have MACD. Okay, so you can just go over this article, and you'll be pretty okay with using MACD in your own trading, because this explains it in quite some details. And again, as you can see, we have limitations of MACD and all of these technical indicators here. So this is a really excellent website if you want to dive deeper into technical analysis and technical indicators. Now, it's not just that we have two technical indicators here, we have a lot more as well. So this is a list of all technical indicators that we have. Again, if you click on this, you can see that now this has changed. Let's see if we click on Bollinger Bands, then again we have more data here. Let's see, then Williams R. So again, this got changed. Average true range. You need to just go here, search all of these names up, and you are going to understand what these mean and how to best use them. I just wanted to sort of go over one or two to give you an idea of what technical indicators are and why they're useful. Let's build one more. It's okay. Alright, so I have covered some of the more common technical indicators, but there are one or two things that are not very common, but they are extremely useful in terms of technical analysis. So the second part of this video is going to cover those. And so the first thing that I want to talk about is VWAP, which is volume weighted average price. So let's see if we can find an article for VWAP here as well. Yep, we have the VWAP here. So volume weighted average price, let's see, we have VWAP here as well. So let's see, this orange line on Tradix platform is the anchored VWAP, but let's for the sake of simplicity, let's just consider it a volume weighted average price. So it's easier to explain it if we anchor it from a bottom instead of if we are anchoring it from the top. Okay, so let's say from this point in time, we are going up, and then we are going down, and we are doing, price is doing something. What does this orange line tells us? This orange line tells us the average price that all the shareholders paid when we went from this point, when we went from this red candle up to this green candle. And also this is the average price that people have paid. So when the price is staying above this, let's say, average price, then that means that there is enough bullish pressure and we have a nice bullish trend. When the price goes below this level, let's assume that you bought here and then you kept buying a little bit more when we were in an uptrend. Now let's say when the price goes down, since the price has gone below your average price that you paid from here to here, you're going to get worried, right? Because this is a very intuitive concept, so you need to understand why this is important. So assume that the price is now going below your average price that you paid, so you're going to get worried. So what you might do is you can do two things here. If you are an institution or if you have a large amount of money, you're going to start buying again, because if you've seen our support and resistance videos, you want that level to become a support, because the price is trying to go below that level, and that level is your sort of break even. That level, if the price goes below that level, now the price has gone below your average price that you've paid, which means you're going to go into a loss. You don't want that, especially if you're a big institution. So what you're going to do is, at this point in time, you're going to just start buying a lot more, which is why oftentimes you're going to see that these VWAP lines, be it an anchored VWAP where we are just anchoring it from a certain point of time, or be it an intraday VWAP where you'll see that the VWAP starts from right in the beginning of the day and it goes till the end of the day on 1 minute chart. So that would be intraday VWAP, and that's what most people use. But anchored VWAP is the real deal, especially if you're swing trading. For day trading, obviously intraday VWAP is good. But I was talking about the reason these lines act as support and resistance levels is because these players in the market, or these participants, want these lines to act as support or resistance levels. When they don't, and when they get crossed, that means that there is going to be some buying pressure. So buyers are going to come in right here and they're going to start buying, so that this level acts as a support. Now from here, this level should act as a support. Let's say what happens if we were at the top. So let's do something different. At this point, let me change the VWAP period to about 68. So now we are anchoring right from a top. So when you are trying to anchor, you want to see, because when there is a top and price starts going down, then a lot of people are going to short the stock, and when we hit a bottom and price starts going up, then a lot of people start buying. So that's why we want to either start the VWAP right from the lowest low or from the highest high. The other anchors that we can use for VWAP are, let's say, earnings or start of the year or different events. So you always want to anchor this VWAP from an event because you're trying to understand the market psychology. So from here you can see that the price was going down, the price went up, but you can see that this level right here acted as a resistance. Why? Because when the price was going down, this was the average price that the short sellers were paying to short the stock. When the price went above that price, the short sellers got triggered. So they just came into the market, they started shorting the stock again, and they pushed the price down, because if the price had gone above this point, then they would have been in loss. They don't want to be in loss. So with this VWAP, you can see who's winning the battle. It's in the market, it's always about whether the bulls or bears are winning the battle. If here you can see that the bears actually won the battle, here finally you can see that the bulls actually sort of defeated the bears, and now the price went above the VWAP. So you can see that here as well, at this point in time the price wanted to go up, but again bearish pressure was high, so we went down again. And then finally at this point in time, now we have defeated the anchored VWAP from this point in time. So now let's say we have crossed this VWAP. Now we can, since we are in a slightly uptrend as well, now we can draw a VWAP from here, and then if we are bullish, then we are just going to follow how the VWAP looks from here. So that is how VWAP levels act as support and resistance levels. And I just wanted to sort of go through this and try to explain the psychology behind why these levels act as support and resistance levels. If you've seen our support and resistance level video, then many of these levels act as these levels for this very same reason. People have bought on this certain level, and when the price dips or goes up onto these levels, then different participants, both bulls and bears, come into the market and they want those levels to hold, which is why they finally become these support and resistance levels. So that was it about the VWAP. Now let's talk about one more thing before we end this video, and that's the volume shelf. Now what is a volume shelf? So this light purple thing, these light purple bars that you're seeing, this is the volume shelf. And what it's telling you, this is actually volume by price. We are going to go to volume shelf. These bars are called volume by price. So what these bars are doing here is that for each region of the price action, these bars show the total volume that was there for that particular region. So for this very long line, since the price stayed here for a very long time, let's see, for about a year, this bar had the highest volume, as you can imagine, since price was there for the longest time. Then at this bar right here, we can see that the price was here, then it kept being here for a long period of time. So this bar is slightly longer as well. So this is the volume by price. This is the volume by price for the entire last 2 years. But sometimes, especially when we are swing trading, this is not very useful for us, because this is just the entire history. And what we want to know is how has the volume based price been, how has the volume by price has been in the last few days, or let's say when we are using this anchored VWAP. So now let's say, so we want to know at which region was there the most volume when we are anchoring it from the top, or when we started going down from this point, because that region is also going to tell us about support and resistance levels. So in order to do that, what we can do, once we have this anchored VWAP line, we can just go to TA and we can click on anchored volume by price, and you can see an explanation if you hover over this question mark icon. So let's do that. Now you can see that the volume by price has disappeared from there, and it's only being now calculated based from this very point in time to our current price. So let's zoom in a little bit right now. Okay, so we can see that there's some volume here, there's some volume here, there's some volume here, but this line, these two lines are the largest, and that is what's called a volume shelf. You can see that these two lines are acting as a shelf now. When you have a volume shelf and your price is above the volume shelf, then since there has been so much volume on that particular level or on that particular region, those levels act as a support level. It's a really good thing to remember, because this is a really powerful signal. Now you can see that another thing happens when these volume shelves are above the price region, then these volume shelves act as resistance levels. And so here we can see that we are right here. So although we went above it, but you can see that this level is almost the same as this anchor BF resistance level. So we can see that this was a resistance here, and now this is still a resistance here. Look at where we stopped at the last trading day. We had the biggest volume shelf above us, and then that's exactly where we stopped. So that acted as a resistance level. But look at where we stopped in the downtrend. This was the second biggest volume shelf. We stopped here and then we started to go back. So you always want to remember that these volume shelves are really important, because they can provide you really strong support and resistance level, because you actually know, you understand the intuition, you know that there has been most volume here. So let's say if we're going up and we have this volume shelf, you know that since there is most volume there and we are in an uptrend, that means that probably most of the buyers were there in this region. So when the price is going to dip on that region, if there is a volume shelf, then all of those buyers are going to come in, because they don't want the price to cross that region, which sort of makes it a support and resistance level. So we talk a lot about support and resistance levels because they really work well, but obviously there are all these other technical indicators as well here that you're seeing. And that's probably it about this video. We have talked about some technical indicators like RSI, MACD, then we have stochastics, then we have some other ones, and then finally we talked about VWAP and volume shelves. So these were some of the more important things that I wanted to talk about. Again, if you just go to this website and search for all different kinds of technical indicators, you'll also find tons of guides on technical indicators. So just go over those to get yourself up to date with all the technical indicators out there. Just know that technical indicators sometimes work well and sometimes don't, so it's totally up to you to try out all kinds of technical indicators and then choose the ones that you really like the best. There are also tons of videos on technical indicators on YouTube. I just wanted this video to be an introduction and to sort of get you familiar with what the overall concept is and how people use it. So that's it for this video. Thank you so much for watching. This was a slightly longer video. I'm going to see you guys in the next video.